In today's video, we're going to cover high probability order block. So basically, what is an order block? I'm going to go over a checklist or criteria only to go with high probability order blocks. I'm going to go over what people were doing wrong when it comes to order blocks, go over examples, how to trade order blocks, and what are the types of entries based on order blocks. Basically, this is a full guide on high probability order blocks. If you guys need one-on-one mentorship, then check the description. If you guys like this type of content, hit the like button, subscribe to the channel. This is Mulham Trading, and let's get into it. If we start with this question, what is an order block? Some people would say it's a change in the state of delivery. Other people would say it's an area where there are a lot of orders to be executed. However, as everyone knows, I make stuff simple. I don't really focus on those stuff. I just take the order block as an area where I can buy or sell and I'm getting a good entry. That's all when it comes to an order block. Now, when it comes to the technical side, we're gonna cover this more, but just take the order block as an area where you get a good price to buy or sell. That's all. Also, order block is part of the PD array matrix. Now we have a lot of PD arrays. We have 1, 2, 3, 4, 5, 6, 7. Now when we go and take this price action leg or this dealing range, we're gonna go drag our fib from here to here, from the high to the low. We're gonna have this 50%. Everything about this is premium. Everything below this is a discount. Now we have arrays on the upside, and those are premium arrays. We have arrays below the 50%, and those are discount arrays. Now if we start from here, we have an old high or old low. After that, we have a rejection block. I don't really focus a lot on the rejection block, but just after that, we have our bearish or bullish order block. And in this case, it's a bearish order block. After that, we have the fair value gap. So we should know that a fair value gap comes immediately after a bearish or a bullish order block. It comes after the old high or low, and then after the order block, it comes the fair value gap. So we should know this order here. Now, all our focus is going to be on the order block today. When I started learning SMC in general, a lot of people were understanding order blocks in a wrong way. Their understanding was that an order block is the last bullish candle before a bearish move, or the last bearish candle before a bullish move. And that's partially correct, but it's not every bullish candle before a bearish move or the opposite. A lot of people, like if we come and take a look at this example, we're not gonna go blindly and pick any bullish candle before a bearish move or the opposite. Like here, we have this bearish candle, and then we have a bullish move. So that's the last bearish candle before a bullish move, but that's not an order block. Order block should have criteria, but that's not an order block. Why? Because every order block has to have few things, and we're gonna cover those. And we're gonna cover those on the next slide. But if we take a look at this, and we consider it as an order block, we can see that price come here and doesn't respect this. The same thing here. This is the last bearish candle before a bullish move, and it's also not respected. Same thing here. It's not respected. Same thing here. Isn't this the last bullish candle before a bearish move? It was not respected. And it goes on and on for this and this and this. Now, you can see here, price did have an impulsive move, and we have this as an order block. But did price respect this? No. So order block is not any last bullish candle before a bearish move or last bearish candle before a bullish move. High probability order blocks needs to have few things to consider them as high probability, and we're gonna get this covered later. If you're looking to secure up to $4 million in trading capital, look no further. Bespoke is one of the best firms in the industry now. Trade at your own pace with no time limit, very low spreads and slippage. Request a payout in 14 days and get it in less than 24 hours. Balance-based daily drawdown and much more other features. For a special 10% discount on all accounts, use code MULHAM at checkout and find all links in the description. Let's continue. Now, same thing. Another mistake is that people really care a lot about the color, but in reality, the color doesn't matter. A bearish order block can be either a bearish candle or a bullish candle, and the same thing applies on a bullish order block. It can be a bearish candle and it can be a bullish candle, and you're gonna know why. The color doesn't matter. Now, what is my definition of an order block? This is my definition. Order block is the extreme candle that comes just before the extreme fair value gap, and it should have the 4 criteria. Keep it as simple as this. When you know the 4 criteria, and when you know that order block should be extreme, and when you know that order block comes before the extreme fair value gap, you would be able to master this and you would be able to catch those high probability order blocks. Now, what are the 4 criteria for a high probability order block? Those are the 4 main criteria for every valid or every high probability order block. It should have a liquidity sweep, and we all know at this point what a liquidity sweep is. We all know what is a breakout structure or change of character, and this depends. Breakout structure applies when we are going in a continuation trade. Change of character applies when we are in a reversal trade. The third thing is a displacement and a fair value gap. I really want those to be together. I don't want to see only a fair value gap but without a displacement, and I also don't want to see a displacement without a fair value gap. So both of those should be presented at the same time. And last thing is an inducement or liquidity. For example, when I have a bullish order block, I want to have some liquidity or inducement above it, and the opposite for a bearish order block. Now, it might be confusing at this point, but don't worry, we're gonna go and cover a lot of examples, and it's gonna be much more clear. Now, let's cover some examples. Let's take a look at this example, and the first thing that you're gonna notice is that we do have a bearish order block, but it's not really the last bullish candle. It's not this one, it's this one. So this is gonna be my order block. And you can see here the color, this is a bearish candle. So it's not gonna be always a green candle. And this time we can see it can be both colors. Now, if we take a look at this, what happened? Price was going up, went down, went up, went down, and then there was a clear liquidity sweep here. Price goes until here and then started to go lower, immediately back into the range. What does that mean? That means this is a liquidity sweep. Also, why? Because price did not displace us above this and immediately started to go lower. So that's the first thing. We have a sweep, and this is the right order to look into an order block. First, we have the sweep. What do we have after? We have displacement and fair value gap. So this is a displacement and also a fair value gap. And you know, the displacement keeps going down and down more. So more displacement presented here. So where's our last swing before the sweep? The sweep happened here. This is the last swing here. And price went and displaces below this line and also below this line, the other swing. So this is I'm going to consider the more confirmed change of character. This one is also a change of character, but this is kind of a risky one. Now, we basically have fair value gap and displacement, and also we have a change of character on this case. Change of character here or here, whatever you want to go with. Both work, even this one. After the change of character, what is the last thing that we need to see? And mostly it's the last thing to be presented on the chart and the last thing to be built, which is the inducement. Now we can see liquidity or inducement is building up. We can see there is a high here that doesn't go into the order block, but then price comes again, doesn't go again to the order block and goes lower. That means we have inducement building up here and here. Those are 2 levels of liquidity. Now, after we mark the order block, which is the last candle that comes before the fair value gap, and it's the candle that sweeps the liquidity. And we can see it's this candle right here. It's the extreme candle that sweeps the liquidity and create a fair value gap after it. We can see that price comes down, goes up into the order block and started to go lower. So we can clearly see the 4 things here. We have a sweep, fair value gap displacement, change of character, inducement, and now this is going to be a higher probability order block. Another example, and it's also a bearish example. Basically, price was going up, went lower, went up, went lower. There is no liquidity sweep here. Price went up, and here we have the sweep of liquidity. Why do we consider this as a sweep of liquidity? Because price did sweep with a wick, went up with a wick, and then came back into the range immediately. And how did it come back into the range? With very aggressive displacement and a lot of momentum. You see, big candles, big candles. If we take our change of character from here, and you can also consider from here, but this is your last swing low, or for people who like to take risky change of character, it's going to be right here because this is the last pullback. But I like to take it from here. Why? Because, you know, even price did not give us any chance to enter from here. So that's a confirmed change of character. This is our fair value gap. So we have the first 3 things. What is the last thing to be presented on a high probability order block? Inducement. And we can easily see that, okay, we have this inducement here, which is a liquidity that gets created before price reaches the order block. But then after that, we have more liquidity here, more inducement. And then price goes and take both of those, but still doesn't go to the order block. What does that mean? That means we have new liquidity here. So now this is my inducement, my new inducement. And what happened is that price went lower just to induce people that, okay, you got a nice entry. What happened after is price goes into the order block, taking liquidity or taking this inducement, and then started to go lower. So that's another example of a high probability order block. It has the four main things. Now, how to trade order blocks. So we already covered what is a high probability order block and what is the criteria for that. Now let's go and cover how to trade order blocks. Now basically, we mark our order block here and we wait for price to go there. Now, inside of the order block, there are two ways to trade this. The first way is this purple line, okay? We're gonna take the same time frame. So let's say if this order block is in the 4 hour, basically I'm gonna come here and have a limit order here at the beginning of the order block. Sometimes you can have it on the 50%, a limit order here, a stop loss above the order block or above the high, and you target, you take any take profit target, any liquidity level. That's the first approach, which is the same time frame, or you can also call it no confirmation. Now the other one is the lower time frame entry approach, or you can call it a confirmation entry. What is that? And that's the blue line. So basically price going up into the order block, and you take an entry inside of this order block. And the entry would be like this. You go to the lower time frame and you look for any entry setup or any pattern that you follow. For example, the 2022 mentorship model. You can see that price was going up. This is the lower time frame. Price going up, and then there is a change of character with a fair value gap and displacement. Now you can enter from here. You might get an entry anywhere inside of the order block, but it's always going to be better than the same time frame. Always better entry. So it can be right here inside of the order block. You can enter here. You will get a tighter stop loss just right here, and the take profit can be the same. Or you can take, trail your stop loss and take some partials here on the middle of this leg. But those are the two main entries when it comes to order blocks trading. Now, what is the advantage and disadvantage or pros and cons for each entry type? Those are the pros and cons. When it comes to a lower time frame, the first thing is the confirmation entry. What does that mean? That means, let's imagine that price is going up. You're not having a limit order. So if price doesn't respect that order block and just keep going up, you're not losing. Or if it's coming down, you're also not losing. Why? Because you're taking a confirmation entry. You're waiting for some structure to build, and then you take a trade. It has a higher reward to risk. Why? Basically because you're taking an entry in a better price inside of that order block, and also you're having a tighter stop loss. It's a tighter stop loss. Why? Because you enter, you have the stop loss above the high on the lower time frame, not the high of the order block. However, it can hit stop loss multiple times. Why? Because it gets so noisy in the lower time frame sometimes. So you can go to the lower time frame, you would see that, okay, you have a change of character, but it's not really a change of character, it's just a liquid sweep. And price will keep going up, and you'll be stopped out multiple times if you're trying to catch that high. But people with the same time frame entry, they will be chilling, they'll be relaxed, they're in the trade anyway, and if it goes to the stop loss, okay, it goes. If not, then they will be in profit. But when it comes to your lower time frame entry, it can hit your stop loss many times. Another thing is missing trades. Let's imagine that price was going into the order block and immediately react down without any structure, without giving you any structure, any change of character. You would be missing the trade, and there is nothing that you can do about this. Now, on the other side, what do we have? The same time frame. You don't miss trades. Okay, you lose some trades if price, doesn't respect your order block as the confirmation entry, but you're not missing trades. So price either go to the stop loss or take profit, and that's confirmed. Another thing is more relaxing. You don't go to the lower time frame, you don't see the noise. Price goes to the limit order, it either goes to the take profit or stop loss. More relaxing. However, it's avoidable stop loss. You can avoid the stop loss by following the confirmation entry, because sometimes price just go up and doesn't respect the order block. So that's how, okay, you could have avoid the stop loss, and it has a lower reward to risk because the stop loss is huge compared to this confirmation entry where you have a very tight stop loss. So this has a lower reward to risk. Now, when it comes to beginners, even this seems so, attractive and people want to be those confirmation trader, but it's really hard. It's really hard and it's gonna hit a lot of stop loss just because of this. But for beginners, if you just stay with this with the same time frame entry, it's gonna be much easier for you and you would be able to get a good reward. That's it for today. I tried to keep it simple for you guys. If you guys like this type of content, then make sure to hit the like button, subscribe to the channel, and share this video with your friends who are struggling with order blocks. I'll see you in the next video.